time has expired. The gentleman from Wisconsin, Mr. Fitzgerald, is recognized.
Thank you, Mr. Chair. Interesting hearing this morning. I don't know if you've seen it. There's a video on Instagram right now of a gentleman working at Jimmy John's, and the customer wants to pay with cash. And he says, I can't take cash because our system is down. And I think we all are becoming more familiar with what the system is. It's kind of this arbitrary thing that's out there that's been handling our own personal finances now for years, and an exceedingly quick rate that is beginning to change. And nobody wants to pay for the system now. They want it to just exist. They want to be able to do all their personal finances off their phone, but they don't want anybody to pay for it. So I think the discussion about the fees, because they're all kind of lumped into the phrase junk fee, as we've heard many times today, has become, I think, somewhat abstract and no one really understands it, right? So as we continue to press for more accessibility for the consumer into our financial institutions, I think we as members of Congress have to figure that out. I don't think that Director Chopra really has kind of grasped it could have the opposite effect. Everything that's been done, I think, is hampering our ability to deliver for consumers. And I don't want to move to a cashless society, but it does feel like that's kind of where we're headed sometimes. Ms. Johnson, can you talk about how your broader customer base will face kind of higher costs and reduced access if credit unions and banks are effectively prohibited altogether from paying for the system which we're insisting on exists? And you know, we all know there's additional security risks related to all of this.
That's a great question. I know probably one of the most prime examples right now is Regulation II, because again, we've got 10 years worth of data now. We can see exactly what happened. And when we reduced those fees by 40%, over 10 years ago, we saw access to free checking accounts reduce and cost to consumers increase by about 30%. We've taken that and now applied it to what the Federal Reserve is proposing to do now, which is reduce revenue again, interchange revenue again by 30%. And we expect that that's going to raise costs to consumers by up to $2 billion. So it has a direct correlated cost, and these costs offset many things. It goes to cover the cost of credit. It goes to cover the cost of fraud. It goes to cover the cost of bringing more people into the financial system. Again, once that revenue for everybody was decreased, the free checking account access was also decreased, and those low and middle income borrowers, about 70% of the burden of that cost was borne by those individuals. So it is directly correlated.
Yeah, Ms. Harbin, I mean, when you have to address the needs of your customer base within the credit union, I mean, I don't think anybody's walking in the front door and saying, I want less access to my own personal accounts. They want more. And when you talk to your IT department, I'm sure the concerns are there are many different things that have to be covered to make sure that this is a secure system. Is that not accurate?
Yes, that is exactly accurate. The cost to protect the security of our credit union and our credit union members for safety and soundness is skyrocketed. We see in the news ransomware and all kinds of attacks, and the cost of those systems is very, very expensive.
Yeah, I mean, I would say, Mr. Chairman, I mean, we all have this list of passwords somewhere, either in your head, hopefully, and not written down somewhere. But the other thing I would just say is that when it comes to the CFPB, I often think there's a disconnect between what their goal is and what's actually happening on the street. And I think that this hearing this morning has definitely underscored that. So I yield back.